fees part. First of all, we'll discuss about fees quickly and then we'll jump on the other side. Okay, so most of the fund admin house, hedge fund managers, asset management companies, custodians, Asian banks, and brokers, even stock exchanges also, auditing firms also. Auditing firms KPMG, Deloitte, PwC, stock exchanges, London Stock Exchange, NSE, okay. Brokers could be anyone, MS, ZPM, and let's say ICICI, famous one. Asian banks again, this could be custodians, CT, BNY, MS, or State Street, let's say State Street Corporation. Asset management companies, there are so many. So just take example Kotak, asset management. Hedge fund managers, again there are so many fund houses, more than 5,000 hedge funds are exist on this planet, and even mutual fund, hedge fund, mutual fund and P managers. So let's say BlackRock, famous one. IIFL, asset management company, they are also into P business. IIFL, mutual fund, let's say again Kotak, all three names that we have, Kotak fund managers. Why this fees is important? Because we should know all these entities, right? Then only we'll have a clear idea about fees. Because I don't like to even give the one or two lines about fees and that's it. No, because we actually do the accounting for all of them. Then we should know about it. Why they are charging fees, how much fees they are looking for, right? Then only we can prepare the accounting entries accordingly. Otherwise, we won't be able to prepare the accounting entries also. And fund admin like NT, Citco, SNC, SS and C, Global, Globoops. There are so many, but there are like famous ones. Just wanted to an Apex one. All these entities, they work for fees only. They work for a fees. That is because even they are not investing here with the hedge fund. Yeah, they are investing means their contribution, fine, but 80%, at least on 80% of the investment, they are looking for a fees. Means every entity is looking for a fees. Every entity. Auditing fees, they are looking for their fees, auditing fees. Stock exchanges, they are looking for a security transaction fees, right? Brokers, they are looking for a broking fees or commission. Asian banks, they are looking for a commission. Custodians, they are looking for a custody fees. Asset management companies, they are looking for asset management fees, right? means which is 2% that asset under management we process, right? 2% or maybe up to 2% on the asset under management. Hedge fund managers, they are also looking for a fees, incentive fees, director fees, correct? Admin, they are also looking for admin fees. Means every entity is looking for admin fees. An entire business is going on only fees part. If you see, if the investors are not interested in the investing part, then all these businesses will be impacted, including where I am working. Still I am working. If my fund admin house, if they don't get a fees on time from the investor, then they will not process salary to me. So it means entire businesses, they are working on fees only. You can see their contribution also, but like most of the businesses that I'm talking about, they are working on a fees part. So it means when we work or when we joined any process, for a hedge fund accounting, for a mutual fund accounting, for a other P accounting and all. So we do deal in these fees. We debit the fees from the investor's account. We credit the fees to the different custodians, agent banks, or brokers account, right? So this would be a prime job, because every transaction should be reconciled. Because on every transactions there would be a one or two entities who can charge the fees on it. So might be custodian, might be agent bank, because agent bank charge the transfer fees, broker charge the broker commission, broking commission, stock exchange charge security transaction fees, auditing firms charge audit fees, custodians, they charge custodian fees, as well as they charge asset servicing fees also. So it means custodian fees and others. AMC charge management fees on asset under management. Asset under management. The hedge fund and mutual fund P managers charge incentive fees. See, who is the great then? Investors. They are actually helping us to survive or generate the salary. I can call you can call. Otherwise, it's because it's not their money. Means the fund house's money. They have pulled the money from the investors. They have invested, and now we are helping them to manage the operations, and then now that's how we are getting salary. And admin fees, they charge the admin fees. All these fees will be debited or deducted from the investor's pocket. And nobody will bear any fees. Fund admin or hedge fund managers, AMCs, custodians, agent banks, they will not bear any fees. Right? And the percentage would be, if you see, mutual funds, so they actually charge, so they bear ST security transactions. This is like nominal, which will applies for everyone. Yeah, 0.001%. Yeah, it's a very nominal fees. Auditing fees, this is again depends, right? Depends between there will be an agreement between fund houses and the auditing firms. So they will define, so could be 1%, 2%, depends. The rate won't be fixed. Simple. KPMG, PwC, they are also business house, right? And FM means mutual fund also business house. So they will decide what the fees should be, right? So there will be a negotiation on the basis of that. You can sign the agreement and pay the fees to them. Broker commission again, which is not fixed. There are brokers who charge up to 20% also on a trade value, and there are brokers who charge very minimal fees. Let's say 1% on turnover. Even this is also not fixed. Let's say if you do the 2000 crore business in a month, so that you need to pay 200 crore to the broker. Then if it is 1%, right? Even it can uh, depends. It depends on the broker house and the mutual fund house or any other hedge fund or private equity house. So they will discuss with each other what fees they can bear and pay to the broker. Transfer fees again depends on the size, depends on the transaction value. But there will be a rate, but again that differs from bank to bank, right? So there will be a bank who is charging only 0.5%, who is charging only $1,500, maybe $1,000, maybe $500, maybe 1,000 rupees for per transaction. So there will be a slab even, right? There is no any standard rates where we can define that there will be no. Custodian fees, we have up to 1 crore, the custodians they charge like 15 rupees for per trade. After that, there will be 100 rupees per trade. So it depends. Okay, there is no rate, so they directly charge in rupees. And if they are offering any other services, so there will be other rate also. Right. So let's say we are just considering 0.25% as a custodian fees. Management fees for a mutual fund, management, admin, and all. So these three fees that they collect, there would be up to 2% fees for all three. Right. So they call like expense ratio. And additional would be here that you may expect the different things, which is entry load and exit load. Means at the time of entry, the mutual fund houses they charge fees, right? And even at the time of exit also, means early exit or exit depends on that situation. So they charge fees on that also, and would be fees will be charged on asset under management. Simple. Asset under management. This all fees applies to the all to there will be exit load, entry load. So here the word would be like entry gate fee, the exit gate. There's two we use words like gate, but similar, which is exit load and exit gate. So all are similar, and they will charge fees on a asset under management. Means current value of your asset. Simple. Current value of investment. Okay, here admin fees depends, but What I believe, up to 1% of a total asset under management, so they bear the admin fees and they process to it. That depends. If you open your own, if you start your own fund admin, you can negotiate with the fund managers. You can discuss with them. You can discuss the same thing with the investors, and you can sign the agreement with them for this particular admin fees. So that depends, 1%, 2%, up to 1%, 0.5%, 2%, whatever amount that you're looking for. Incentive fees 20%, 20%, but up to 20, or maybe even about 20 also they charged. Okay, so depends on the agreement between the investors and LPs. 2% expense ratio. Okay, management fees 2%, up to 2%, or maybe more than that, depends, but the 2 is like standard one. Up to 2% on asset under management. There are a few fees which will be charged on a transaction basis, like custodian fees, like even custodian they can charge fees on a quarterly basis or monthly basis, also depends. If you're holding the security in your account, so they charge on a periodic basis. And if you're just buying and selling the securities, then they will charge on a transaction basis also. On every transaction buy and sell trade, they charge 15 rupees or 100 rupees, depends on size. That depends on the size of the trade. This applies to the transaction fees, the transfer fees, the broker commission, STTs, audit fees, also periodic fee. So that depends if they want to charge the fees on a per fund or per day, per per investor. So that is again mutual agreement between the P, hedge fund house, mutual fund house, investors and all. Fees types. Then entities. See, now you have a details, right? How the fees work and all. So now you can apply the accounting treatments. If you have the fees details, now you can prepare the accounting entries. As simple as that, every fees will be charged to the investors. So while preparing the fees or while applying the accounting treatment, what we check then? We check the document where we have mentioned about the fees details, because on every document here you can see the details: 2%, 1%, 20%, 0.25%, 1%. So the ratio, percentage, everything will be there on the document or invoice. So what you need to do is you just need to put the details into the system against that the investors or that the fund. So the fund will calculate the admin fees, and then you can pick that amount and update in the financial statements. Yes, this is the fees that we need to update. And here the two accounting terms, you may expect questions on it. So I'll provide accounting entries where you can read it, okay? So here the two terms, which is accrued, right? Accrued fees and fees paid. There are fees like admin fees, management fees that we accrue. Means we calculate on a daily basis, because fees is well, that we know, right, which is a 2% is fixed. On asset under management, we calculate the fees. We calculate the fees, and that we also accrue it. So on a daily basis that we accrue the fees, audit fees that we know, admin fees that we know. So it means so that we calculate on a daily basis, because every fees, so they decide, or I would say there are few fees like they allocate the cap. Cap means it's a limit. Let's say for admin fees they have allocated 1 lakh, right? And they actually allocate it, because investor don't want to pay the fees on a daily basis, so they actually process fees to the fund managers, right? Then the fund managers, they will park the fees into the different accounts. So it means they actually allocate the fees to the different limit, so from which we actually deduct it. On a daily basis we deduct it. Even let's say for a audit, as an audit fee also they have allocated budget, which is 1 lakh. Transfer fee, there's on a like ongoing basis fees that actually will debit automatically from the transaction itself. For management fees, that we cannot predict, because only at the end of the quarter, on the basis of performance, we can calculate the incentive fees, right? Sorry, this is applies to the incentive fees. Management fees, that we know 2% on asset under management, right? Broker commission again on a that is transaction base, right? On every transaction they charge the fees. This is also again based on the transactions, so where you cannot see any kind of cap and all. Transfer fees again on the transaction base. Custodian fees also, some that depends how the custodian is offering services to us. If they still, if they say like we have also cap facility, so you can take a cap or coupon and you can just swipe it every time. If they can say this, then there will be also cap. But that depends on the custodian and their service facility. So now here what we do, we accrue the fees throughout the year, right? Because at the end of the year, actually that the fees will receive to us. But sometime that the investors, they paid fees in advance also, right? As a prepaid fees. For investor, so that would be the assets, but for us, so we have received income in advance. Because fees is the income for all of them, right? There's entities, the fees is the income for all of them. And if the investors, they are paying fees in advance, so it means should be income. So income that is received in advance, it's a liability. For investor, that's an asset, because they have paid in advance. That's how. So we prepare the investor accounting as well as we prepare the fund accounting also. So that's what like fund is, means that the funds, actually for a funds we prepare the financial statements as well as we prepare the financial statements for a investor also. That's how we debit the fees from the investor's account and we credit the fees to the funds account, because that's income from them and it's expenditure for the investors. So we debit the fees from the investors account, and that's how we perform the reconciliation as well. And here the two terms that you can see, accrued fees and the paid fees. Paid, it means there will be a one accounting entry, right? Actually here we have received fees, right? Here we don't need to accrue anything. But where is the actual accrue? Accrue, it means fees which is known, right? But that yet to receive from the investor. Yeah, it's not received, yet to receive. Correct? So that's what on a daily basis we just carry that. Let's say for 1 year, the fees that we have decided, which is 1 lakh. Correct? So 1 lakh is the cap, and we are calculating, let's say, admin fee. So there is a base days that already given in the books, that is you can consider either 365 or else 360, but most of the companies they are following 360 days because the investors they have paid admin fees, or maybe fund admin house or fund managers they have paid fees for entire a year. Correct, entire a year means for entire year they have paid fees to us, so that they are asking us or requesting us to do the accounting for it. So it means they have paid fees, that is 1 lakh for entire year. Then we'll calculate that fees which is that we want the fees for per day. So let's say we have assumed the base days would be 360 days, and do it calculation. 277 rupees fees would be for per day. Yeah. So it depends. If they have paid fees in advance, so in that case we don't need to that what I would say carry as accrued. Then it will directly what we'll do, we'll debit from this account, right, this fees, and we'll credit to the actual account. That's it. So there won't be any calculation and all. Just debit the fees from the cap account and post that fees to the admin fees. That's it. Admin fees account. Simple. Because there will be two accounts, cap account and admin fees account. Debit the fees from cap account and then credit to the admin fees account. Yes, if the fee is paid in advance. If it is not, then still they allocate the cap. For a year, they allocate the cap, right? So if they allocate cap, so then we'll calculate the fees like this. This is for a year, for per year. This is for per day. So every day we post the accounting entry for accrued fees. There are fees like admin fees, then the custodian fees, then the audit fees will have a same treatment, and we consider that fees, NAV calculation part, right? So this is a and accrual. It means simple. If you like the let's say so year begins from 1st April, or let's say 1st January, right? 1st January to till date, how many days that we have served? The calendar, it's 2 months, right? January, February, and March. And March, which is 12, 60, 72 days. Let's say today we are calculating the fees, right? So we have served 70 days, correct? So now we'll multiply it, 72. So we have accrued fees, which is 20,000 till date, correct? So it will like multiply in same way. Let's say if it is like 180 days, then just calculate 50,000. So that fees will consider in our books of account to prepare NAV pack. So it means this is one of the important one which is we required to calculate the NAV. And if you miss to apply this, fees and all, so there will be directly impact on NAV, right? If you forgot to book this fees 277, so it means you have acknowledged it that there is no fees applied for that particular day. So it means that there will be a positive impact on NAV, right? So you forgot to debit that fees. It means that you need to debit from the NAV actually for that particular day's NAV. That's what we are calculating this accrued fees. So there are so many fees, and there are the main fees where you can see when you joined any fund house and all, and you may expect questions on this part as well, like what is the difference between management fees and incentive fees, admin fees and custodian fees and all. So here you can just give the example that the custodian charge fees to offer safety and the other services. The brokers charge commission, right? Then transfer fees, it means if you're transferring any fund from one entity to another, then the agent banks the charge the transfer fees, management fees when the fund achieve the performance or generate any return on the based line, right? Then you can see the incentive fees as well. Management fees, that is again by default the fund houses charge like up to 2% or maybe more than 2%, depends on the investors, fund managers, right? So they will decide, or asset management companies, how the fees should be and all, right? And with the PE and admin, sorry, PE and hedge fund. So here that the two other terms you may expect, which is I'll have to, the other term should be high watermark, high watermark. But here they call like catch up. Instead high watermark they call catch up. High watermark and catch up. CFD. Hedge funds, they actually charge fees on a basis of high watermark, and private equities they charge fees on a, they don't even charge like this, they directly charge catch up. They call for a catch up, they will invite for a catch up, so they want catch up. So high watermark then will cover catch up, we require another session, means next sessions that will catch up, because there is a process and all. So high watermark, simple, it's labeled. Okay. If your fund able to generate the return above this level or line, then only the investors will pay the incentive fees. Let's say the first level is 100 NAV net asset value. This is the base. Correct. Let's say in the next quarter, the NAV of the per unit is around 150. Now see, high watermark was 100 for per NAV, and now we have achieved the level which is 150. So NAV achieved, it means like it's a current NAV. So this is your invested value, this is your invested value, and this is the current market value. Current if you generate the return on and above the 100 NAV, because this is a base investor value, then only investors will pay the incentive fees to you. Otherwise, they will not. And let's say now the value of, now let's say it's a quarter end, and now we are charging fees to the investors. And now we are looking for a calculation. Here we'll do the calculation. 150 is the current asset, current market value, correct? So we'll minus invested price, because already we have committed that will not pay any incentive fees on invested value, correct? Are you with me, right? Okay. So 50 on 50, so they charge 20%. Here the incentive fees you can see. Till here that you cannot charge any fees. So the 10 rupees that they charge, means hedge fund managers, they charge fees to you as incentive fees. And the next quarter, means from this, let's say here that we have paid fees on 150. Till 150 we have paid fees, correct? So now your HWM will be moved, correct? Because till this level we have paid it. Now the HWM will be your 150. You need to pay the fees. If you're looking for incentive fees, then you will have to generate the return on and above the 150. Let's say in this quarter, we have achieved 180, which is again this would be your baseline, baseline, or I would say till here we have paid it. Very easy to understand. So now this is the current market value, or NAV in short. Now again we'll calculate and process the incentive fees to the fund managers. How will calculate then? 180 minus 150, because up to 150 already we have paid it. So we cannot pay the again fees on a entire amount, correct? That doesn't make sense, because already we have paid it and still we are paying fees, then it will increase the burden, that fees burden on the investors. Then on 30 we'll charge fees, which is 20%. So the 6 rupees or 6 crore, depends on the size, will be the fees to the investors. So this term should be like high watermark. So every time, so high watermark will be moved to the next level, to the next level. There will be a question like, let's say in this case, let's say up to 180, like this quarter means again, so these are the like past quarters and this quarter, this should be your base value, correct? Because still here we have paid it, baseline. Now in this quarter, the value of your investment means NAV is this. Yes. When the value drops, in that case, will not able to pay any incentive fees to the uh, managers. The investor will not pay any fees. They will pay the management fees, but they will not pay incentive fees. This is how means your HWM works. Okay, so there are a few terms, those are not important ones, but I'll forward you the docs for it. That is for equalization, because here the term would be like equal fees that we charge to all the investors, right? And that's what, like, nobody is getting burden or nobody is getting extra fees and all, because we are not discriminating while allocating the returns from the investor. Then why we are discriminating while allocating or charging fees to the investors, right? So that's what, there are a few techniques. Even you don't need to calculate anything manually, there will be a system, right? So which will calculate everything. Just you need to ensure that, yeah, the calculated fees is correct for each investors. So that task would be like investor allocation tasks that you may see in the hedge fund accounting, mutual fund accounting, or not mutual fund, private equity accounting, where they widely play the role, in that the allocation part, they allocate the fees. Allocation, it means nothing but, because as I mentioned, we do offer accounting services to the fund house as well as to the investors. So we ensure that the fund statement is also updated and investor account is also updated. Simple P&L. Then only that the investor can calculate the need asset value of the per unit, right? So they do allocate, they work on it, they charge the fees like this, and that there should be equalization also. So you may expect questions on equalization part, how the equalization work and all, HWM work and all, right? Then the different fees, and the most important question is, as a fund, means as a fund accountant, uh, there will be a different team, okay? So we who work with the fund managers, private equity managers, and hedge fund managers, they actually calculate and charge fees. We just perform and validate it as accountant, because fund managers, they are actually closely work with the investors, so they are aware about it, how should be the fees and all for per investor. They charge, they calculate, they do everything. We just ensure that, so whatever fees that they have charged, that is correct and applied correctly in both investor as well as NAV, that the fund NAV part. Okay. So I think we should stay here, right? So we are done with the fees part. Every time that I'll have to say this, what is happening with this? Okay. Any question that you have till here? Right. So we are left with only two legs, which is subscription and redemption part and NAV calculation. Right. So one or two, 1 or 2 sessions, it should be finished. Hardly. Okay. For a fees, I'll send you one document. Okay, you can go through it. So where you cannot see such a discussion because that nobody can narrate like this. There would be very standard procedure how it works and all with the standard rates. That's it. Okay. Okay, then we'll see you next session. Bye. Yeah.